Right now, I want to talk about something that's been all the rage, and that is investment pools that don't have normal disclosure to you. They're called dark money funds, is one term used for them. There are SPACs, which are special purpose acquisition companies, I think is what SPAC stands for. And then you've got all these real estate crowdfunding kind of groups, and it sounds wonderful. All these things, the idea is you're following a promoter, not a specific business that is known and has a proven track record, not something that's publicly traded. These things are turning out to be great for the promoters and terrible for the investors. A new investigative report from the Wall Street Journal found that people who invest in these SPACs are only making their organizers rich. The organizers, by the account of the Wall Street Journal, have been able to promote a company, run the value up to unknowing investors, sell off once the value's risen, and run off with the investors' money to the tune of $22 billion. $22 billion taken from people who are just trying to get a return on their money and instead end up with their money put through the shredder. And then you got all these real estate groups that don't do normal disclosure and say, this is your opportunity to own real estate without having to manage it. Just give us money and we'll handle it. And now what's happening? One after another, those things are going insolvent. And in the best case scenario, you had to pay huge fees up front to go in these crowdsourced real estate groups that they're not required under the law to do real disclosure to you. Again, in the best case scenario, you just paid a lot of upfront fees. In a mid-case scenario, you had a need for the funds you put into them, but they're not liquid. You couldn't get to your funds till they tell you could. And in the worst case scenario, they go insolvent and your money's gone. It is the same tune over and over again, that when the promoters see an opportunity to promote an investment to you that somehow supposedly is better than traditional investing, there are people who want to believe there's shortcuts. And what happens is you get into a dark money thing, where dark money, you're putting money in, you have no idea what's going to happen with it. It's just, I'm a genius with investing. Give me your money and I'm going to make it into more money for me. I want you to be really, really fully aware when investing is traditional risk and when investing is higher risk. When you buy something that is not normally publicly traded, that means there's not normal disclosures. You don't know what's really going on behind the curtain. You will typically have higher expenses going into it, and it is not liquid, meaning there's not a regular market. If I buy a stock, whatever stock, Apple, Tesla, I buy an index fund, I buy an exchange-traded fund, and I decide next week I don't want to be in it, the market has a price that's clear, and I can sell it, usually no commission. Normally I pay no commission in, I pay no commission out. I thought it was a good idea to own this, that, or the other stock, or this, that, or the other fund, or this, that, or the other mutual fund, or exchange-traded fund, or whatever. But bam, it didn't turn out that way. So I got out, or I needed the money and didn't anticipate. I can get in, I can get out. When you get involved in these crowd-funded real estate things, the SPACs, which are now fading, fortunately, from the scene, but something else will come along that will separate you from your money. When you get involved with the dark pool or a not regularly traded thing, you know, it's really, really in with a lot of the high commission brokerages and the bank-related brokerages to sell you private placements. You're going to have an opportunity to get into an investment before the public can get into it. We're making this available to you so you can be in on the ground floor of opportunity. Did you know the ground floor of opportunity in a private placement leads from there to the sub basement in returns? Because you pay enormous fees and commissions up front, and you can't sell it when you want to sell it. The legitimate mainstream marketplace for investing is one where things have a clear value. The value is set throughout every trading day or at the end of every day, and you can buy it when you wish, you can sell it when you wish. If somebody's pitching you an investment that doesn't offer those things, that is an investment that is too hot to handle and bleeds so often into where you get ripped off, like has happened with people who put billions upon billions into SPACs and then ended up having their money vanish right before their eyes. The only thing efficient about them is the ability to separate you from your money.